we have Ian Henderson, who is Group Property Director of Wincanton. Ian's been with Wincanton for 9 years, having previously been Head of Property at BAA, B&Q and Sainsbury's. As Group Property Director for Wincanton, Ian's responsible for managing the property portfolio across the UK and Ireland, comprising around 6 million square foot and 200 plus sites. Next, we have Paul Hanley, partner at exciting new launch, Bridge Developments. We also have Tom Edson, Head of Retail Capital Markets at Colliers International, who is a real UK supermarket specialist. Andrea, who's Head of Industrial Logistics and Research, and Len, who is the Head of Industrial and Logistics.
We moved from 19% in 2019 to around 27%. And we expect the overall annual share of online sales to reach around 30% this year, because of course of the extra volume of trading that we saw over the past couple of months and all the lead up to Christmas.
As Andrea said, 2020 was a stellar year. If you look at the 48 million square feet, even if you strip out the Amazon factor, as we call it, that would still allow for a record year if you stripped out their 30% of the market share. I think the other really good dynamic is if you look at that's broadly 30 million square feet in the supply and the take-up was circa 50, that shows, if you do the comparison, you'd only have between 6 to 8 months of supply available on the current take-up. Of course, last year was a stellar year, which means the likelihood it's not going to be that this year. But the platform is set, again, I believe, for another great year of take-up.
How long can this great purple patch for industrial carry on?
Thanks, Paul. To be honest with you, I probably wouldn't want to put a time frame on it yet. I think from our perspective, we hope it'll continue for the foreseeable. Markets obviously are cyclical, and at some point it will end. But we're certainly not seeing any signs of that at the moment. And certainly from where we're sitting, only just under 2 weeks into January, the market really has sort of picked up right where it left off at the end of December. Activity seems very, very strong. We're already hearing of deals being done. We're already seeing a lot of opportunities come across our desk as well. So certainly, the sentiment from the agents and from other people that we talk to in the market is very bullish, and I consider that it'll stay that way throughout the rest of the year.
The way through this is better collaboration with our customers, collaboration with developers and landlords to get them, just understanding the world we're working in.
I'm quite optimistic that the logistics revolution, call it, will continue for the foreseeable future. I think there's a lot of dynamics with it. The rents are still, reasonably affordable compared to some other sectors, and the online e-commerce is obviously driving it forward. And actually, it's a very simple asset class, which I think a lot of the investors quite like as well. But high-level summary: start the year very busy, and I think 2021 will be another sort of stellar year.
Go back to the days, which sure you remember, when very large supermarkets were being built, 130, 40,000 square foot. Obviously, that was no longer fit for purpose, and what Tesco and Sainsbury's, etc., have done, have now repositioned those for doing online fulfillment. And ironically, if you want to pick off a nice 8-acre site in an urban location for that fulfillment, well, it's already there. Urban fulfillment is called a supermarket. You've got customers coming to your door now in much smaller conventional footplates that the public will see, but then also dropping in, like I say, that online in-store fulfillment piece. We also need to be mindful that we're seeing more and more fascias come into those supermarket space. So, we saw Sainsbury's, obviously, with Argos, announced that they were going to close a number of stores, bring them into the actual supermarkets. That was a direct correlation of the pandemic, and fast forwarded the business plan by 4 to 5 years as customer habits changed, and you can start to use these buildings in different ways.
I agree with what the other guys have said around the flexibility and also future proofing for the potential these buildings may one day be served by autonomous vehicles, or more automation needed to be brought in the here and now, having greater provision for electric vehicle charging and things like that. But I think probably more important than that, for what will the building in the future, what will that look like, is probably actually more of a greater focus on the employees that work inside it, and their well-being, and how the building can be designed to reflect that some thought has gone into that. How do these buildings make people feel is a huge point, and that's something that employers are more aware of now than ever. And also just how the building sits within the community that it's located within, and how well it integrates from a multitude of factors, from public transport links and things like that, but also other things that the building has around it in terms of amenities and walking routes and things like that. That's really, really important now, and we're seeing that customers and tenants are looking at those sorts of attributes as well. Employee retention is huge, and if you can try and solve some of those issues, when you're selecting your building, longer term, that just builds better resilience for your workforce.